Good afternoon, everyone. I'm Tim Richards, Technical Services Manager of the Managing General Agents Association, and on behalf of the MGAA, I'd like to welcome you to our panel discussion this afternoon. This is being delivered by AXA on the subject of how to avoid the pitfalls of the softening market. Before we kick off, I'd just like to run through a few housekeeping points. Please ensure your microphone and camera are turned off. If you'd like to ask a question, feel free to use the chat button at the bottom of your screen at any time. This presentation is accredited for CPD hours if relevant to your ongoing professional development programme. And here's a recap of the learning objectives for the session. At the end of the session, delegates will be able to describe the factors behind the market cycle, list the ways to overcome the challenges of the current market, and identify the actions and steps you can take to protect your clients. This panel discussion is being recorded, and a link to the recording will be issued post-event together with our feedback survey. Please take the time to complete our survey, which will take no longer than 2 minutes. This allows us to deliver the best possible future events to our membership. So without further ado, I'll pass across to Michael Keating, our CEO, to kick off the session. Over to you, Mike.
Good afternoon, everybody, and welcome to this exciting and with our esteemed panel, who I will introduce now. So first and foremost, I'd like to introduce Gary Head, who's AXA Director of Schemes and Delegated Authorities. Joel Markham, Head of Sales and Marketing DA at AXA Schemes. Lee Hudson, Head of Specialty Lines, AXA Commercial. Adrian Scott, Managing Director, Financial Lines, Penn Underwriting. And Daniel Berry, Chief Underwriting Officer, Brown & Brown Europe. Good afternoon, gentlemen, and welcome. Okay, so what I'd like to do first and foremost is really try and just get a current market temperature around sort of the rating environment. And if I could come to you first, Gary, from an insurer lens, are you seeing signs of market softening? And if so, what are those signs?
Thanks very much, Mike, and thank you to everybody who's tuned in. Very much appreciate your time today. I think for me, the important thing for us as a community, a delegated authority or MGA community to consider is, certainly in the past, I think somewhat unfairly in certain circumstances, we have been blamed for some of the, market softening that we've seen that have then ultimately led to a situation we all want to avoid, which is customers potentially not getting what they expected from their insurance product. That's either potentially because the MGA wasn't operating within the boundaries they should have been, or ultimately because those entities have been closed down by carriers, and as I say, difficulty in then settling the claims and the cover under their insurance policies. So it's essential we don't have a situation where the DA market is pulled into that again. I think in terms of are we seeing signs of softening in the marketplace, I think that's dependent upon the line. So certainly some lines are very sensitive to inflation. Motor is a good example of that, and we're not and shouldn't see any softening in those areas yet. So that's great. But certainly there are lines, and financial lines is one area like that where we're already starting to see some softening of the market, and that is really worrying, to be honest.
Okay, thanks for that, Gary. Dan, if I could come to you from a MGA perspective, what are you currently seeing? What's your sense?
Yeah, afternoon, everyone. Well, I think that the MGA market, it hasn't always had the reputation that it enjoys now. I think it's in a good place. It's well represented. And the market's more defined. There's more discipline there than there has been in the past, which is really positive. I think one thing we should probably remember as well is that memories can be short, but I think insurers and MGAs have to take responsibility for some of the sins in the past. Carriers that were looking for top line growth, and maybe some MGAs that are focused on earnings more than underwriting profitability. I think a lot has changed since then and moved forward, which is good. And we definitely don't want to go back to those times. In terms of current market, agree with Gary. It's line specific. From our perspective, still strong on property and casualty lines, not quite where it was 12 months ago, but still expecting that to be in a positive space for 24 when we've been budgeting a bit less than this year. And I think maintaining that discipline that we've enjoyed in those lines over the last couple of years, that's worked well for both MGAs and insurers, is important, and we need to focus on that.
Thanks, Dan. Joel, I know that you spend, and no doubt a lot of the people who've joined the webinar do in terms of interacting with brokers. Could I take the opportunity to ask you in terms of what your sense is from the broker community? Where 90% of the MGA membership deal with brokers, and I'd really like to get an insight perhaps from you in terms of what do you feel the sentiment from the broker community is around market conditions?
Yeah. Afternoon, everybody. I think it's a really interesting question, Mike, because we're seeing very different conversations based on the products, as Dan and Gary have said, right? So I think what we can expect to see and expect to hear is the growth on, the pressures that the customer are under, the economic turmoil. They are things that we will be facing into. And I think one of the things that we're starting to see is that there's a lot of training that's gone into hard market training. We hadn't really had a hard market up until about 2018, 19. Actually, there's going to be a need to do some retraining around softening markets and softening rates, and actually taking things like these conversations out into the broker market more widely. But we're definitely seeing a lot of brokers being proactive and actually starting to think about underinsurance. For example, 80% of UK property is deemed to be underinsured. People are starting to walk towards those rather than just always relying on price. And I think there's definitely people looking at advice and risk management to start differentiating. And actually, as insurers and MGAs, we've got to look at what's our part to play in that. How do we bring our knowledge and expertise to the fore, be that as a capacity or actually as a niche MGA in a specialist sector. You're going to know those customer segments really well and the pinches that they're finding.
Okay, thank you. I've sort of kept Adrian and Lee just held them back here a little bit, because the same question really to you two, and if I could start with you, Adrian, and then perhaps move on to Lee. But you both operate in very specialist segments, okay? And I suppose what we'd be interested to hear from you is probably two things. Your own view of the segments you particularly operate in, and whether you feel sort of specialist segments are sometimes insulated from the rating environment, or actually they just follow the fortunes generally of market conditions. So perhaps if I could ask you that, Adrian, to kick off on that and then move across to Lee.
Yes, certainly, Mike. Afternoon, everyone. Gosh, don't I wish they were insulated. So, yeah, look, I'm involved in the financial lines area, PI, cyber, D&O, etc. So I think, look, what we've seen a lot of rate in the last 3-4 years in all those areas, which has been good because that's got us back to a level where I think everybody feels that, we've got a fair chance of having a profitable marketplace. But, as is always the case, when you have that much rate, and there has been so much rate going through some of these areas, 200-300% sometimes, people, someone will come along and try and have a go at doing it cheaper. And that's exactly what's happening. People are moving around the carriers and setting up, and with long tail businesses, which is what most of those are, the reality doesn't come for a few years. So it looks good for a little while. And I think that's what we're really looking at right now. Now, look, it's not, soft market is perhaps too strong. I'd say it's just less hard at the moment.
Okay, and Lee, your own sentiments?
Yeah, I think I very much agree with Adrian. I think that there are certain barriers to entry in specialist areas, though, and in specialty. PI is perhaps one of the ones that's going first in terms of being less hard rather than softening. And I think that's, that is due to it being very easy to come up with a PI wording and try and, sell that into an industry. But Adrian's quite right, is that, the returns today that you might not get are not indicative of the tail of exposure that's being taken on. And that's the concern, that people will, make hay for a couple of years at rates that aren't actually viable. And then the tail will come around and catch up. And it's a story we've seen repeatedly in the PI market. I think in some other specialist areas, those specialty areas, it's a little bit more difficult to compete. Management liability is an area that springs to mind in terms of the additional services that you need to sell to a customer beyond just simple indemnity. It's a little bit more difficult to reach that bar. And cyber is an interesting space as well in the financial lines area, in that there's lots and lots of different offerings in the marketplace. And I think there's probably a lack of understanding across the marketplace as to exactly what customers need in that space. So, those barriers to entry exist, but there is definitely softening occurring. And hopefully it won't be a sharp fall. We won't be going off a cliff. If we can just have less hardening, to Adrian's point, I think that'll be good for customers, brokers, MGAs, and insurers. It's a sensible way to go.
Okay, thank you. So just to replay that. So I think that the sense we're taking away is that there are some softening around some lines, but there still is sort of positive rate growth across property and casualty, perhaps not what it was before. I think in financial lines, clearly that there was significant rates gone through. So I think the word less hard is perhaps come through from that perspective. So I think that's given all of a sudden a call sort of a reasonable sort of perception of where you feel we currently are. Can I just take the opportunity, because I think Joel made a good point around training and people who may not have experienced a softening market before. What I would like to, and I'll start with you, Dan, if I may, is that, what are the sort of real signs and the cardinal sins, for want of a better phrase, that, drive the environment into a soft market? What should the 100 or so people on this call really be, be alert to, saying that, we are sliding into that abyss?
Yeah, thanks, Mike. Start with that training piece. I think is an interesting one. So I think we all know we've had a lot of knowledge and senior people leave the market, and I think we're feeling that now. And I think traditionally, and this was quite good for MGAs, and we can't benefit from it quite as much now, but insurers were historically really good at training people, and then after a while we could snatch them and come into our organisations. And I'm not saying they're bad at it now, but I think, like everyone, resource is difficult, time is difficult, and actually we probably don't put as much into that as we used to. So I think that's one aspect of it. We need to have a commitment to training people and continuous training of people. This isn't just about people coming in early on. It's about throughout people's careers, making sure they get the right training. So I think that's one piece. And then if you take the experience attached to that, Joel touched on it earlier, we've got people who haven't necessarily experienced, I certainly haven't experienced a hard market, and there'll be some now who won't have experienced a soft market. So knowing how to write business in that scenario, knowing how to negotiate and deal with brokers in that scenario, and vice versa, is important. But I think we see it, don't we, with capacity in the market, people maybe getting flattered by some positive results over a couple of years and thinking, right, let's go again, whether that's existing or potentially new entrants as well, thinking actually we can probably have a go at this undercut market, take quite a decent share of it, and come up with some better results. And I think we probably just have to be a bit realistic about that. We've seen it happen time and time again. It's probably not going to be different this time round. I also accept that's very easy to say sitting here on the Zoom, oh, we've never done that. Who's going to do that? So I recognise that, but I think it's not helpful for the market in any way or the end customer. They don't want the volatility of it, and the carriers don't want to be engaging in that. And from an MGA perspective, it impacts our options in the market and those long-term sustainable relationships. So I think it's an awareness piece, it's a training piece, and I guess there's a discipline aspect to that as well, which we all need to try and do.
Thank you. And Adrian, coming to you, anything you'd like to add on that?
Yeah, I mean, I think what I'd say is that the prolonged period of hardening, which really was quite long compared to the last sort of hard market we had, has allowed everyone to get their houses in order in terms of moving to a place where everyone thinks the market's actually working. And in doing that, they have managed to manage their data very well. So I think everyone's much more conscious of the data, and they really understand the profile of books and what's working and what's not working. So I think as it softens, or as there's less hardening, or whatever we want to call it, it's going to become more surgical and more informed than it's just going to be blanket rate increases by everybody across the board. And I think that's what it should be, because there are winning and losing parts of the marketplace.
Okay, thank you. And Lee, within that speciality umbrella, your own view.
Yeah, the data is a really good point. I think people can be a lot more focused and targeted as to exactly which areas are worthy of pursuit against the rates that are currently available, and which shouldn't be. But still people can underestimate what is hidden. I think data tells you one line. It depends how much data you've got, how long you've been around, and one area specifically in professional indemnity that I've become a little bit concerned around is the easing of restrictions with regards to fire safety cover. I think people are making some very big decisions there and deciding that the problems emanating from the terrible Grenfell disaster are all over in the construction industry and that everything's fine from here on. But I'm less certain that that particular industry's got its house in order. So that data is yet to appear in people's triangles. So they're making decisions based on faith, really. But yeah, it will be more targeted. It will be more specific, I think. But we can all kind of look at our own information, pick and choose which bit we decide to respond to.
Thank you. Gary and Joe, I want to ask you the same question, but I just want to pivot and add just another layer, if I may. So that there's a sense that, top line, obviously, as you've all commented on, has been driven by a strong rating environment. There is a market sense that, shareholders are now looking at increasing customer count, because as we all know, you can grow your top line, but not necessarily increase customer count. And what I'd like, perhaps, Gary, if I come to you first and then to Joe, I just wonder if you could give, some reassurance, the fact that if organisations are looking to increase customer numbers, is that actually also going to potentially be a lever which will sort of move us into a softening market, or to use Adrian's, a less hardening market, because customer numbers, that has a different sort of scenario than if you're just getting organic rate growth.
Yeah, well, I think the customer is the all-important thing here, Mike, and I think ultimately what we all want to deliver is valued products that that give those expected outcomes, no surprises at claims time. I think if you look at what's caused some of the issues in delegated authority market in the past, it has been new things, right? So my message on your original question would be careful about new things. AXA launched in 1816. We've been doing UK DAs for over 30 years, right? So we aren't going anywhere. But there are plenty of people who think they can charge 2/3 of our price. And, I'd like to think we are pretty close to understanding the technical price of those lines we've been in for that period of time. Now that, if we're not careful, that is going to end in one position. So be careful of new stuff. And then the second piece of advice I would give definitely is know what you're selling, right? And if you win on price, you'll lose on price. There's the old saying. And if a customer comes to you because you've managed to knock £1,000 off their renewal price, there will probably be another broker around who next year can knock another £1,000. The cover might not be so good, and the security security might not be there ultimately to settle the claim, especially if it's a longer tail claim, as Lee and Adrian have touched upon. But you'll find a cheaper price, there's no doubt about that. So be clear on what you're selling, and you've got to then sell on those value-added issues, that risk understanding, that risk management that the industry is so good at. And we need to share that more with clients so that they really appreciate how we can both help them to understand risk and to transfer risk off their balance sheet.
Okay, thank you. Joel?
I think one point I'd add to Gary's is it's quite easy to think of a customer as one insurance policy, but actually they're a multifaceted business, and making sure that you understand all of the relevant and pertinent risks that they've got, and taking the time there, and then also making sure that you're able to put forward solutions to it. So yes, they might be able to get a cheaper price, but has somebody taken the time to actually fully explain? And I think there's some really good things happening in the market, and actually, Dan and Adrian's businesses are both doing this, where providing not just a package because it's what works for the insurer or distribution, but actually understanding the underlying risks for those customers, embedding things like D&O and cyber, and actually trying to think of them as the number of policies that you've got for that customer, and how can you make sure that you're providing that all-round risk service as well.
Okay.
Yeah, Mike, can I just step in there on Joel's point? I think that is actually a really important point about the different policies and the interaction between them. Yes, you can always get a cheaper price for any policy. That's always true. But where things relate to each other, such as, and D&O cyber is one of the ones where they do relate to each other. One without the other is half dressed. If you're buying from two different places, there's two different wordings. You don't know how they operate together. You do need to understand how they operate together. That is a really important value-added part of this going forward, I think, as more and more policies really start to touch each other.
Okay, so I want to hold this point actually, because I just want to make sure that I'm absorbing and people on the call are absorbing. So you don't feel that the softening market could actually sort of be accelerated, where shareholders who over the last 3 years, as you've all commented on, have benefited from growth through organic, not necessarily increased customer numbers, that if that optic changes and therefore shareholders say, well, we've now got X million with this number of customers, but those customer numbers haven't really changed over the last 2 or 3 years because it's organic rates. You don't feel the fact if there's a real drive to say we want more customers, that will be a potentially a lever in moving towards a soft market. Do you want to pick up?
I'll add something on that, Mike, if it's okay. I think that it has the potential to. So if you look at where we've achieved strong rate and particularly strong rate growth, and with inflation over the last 12 months or so, you could argue that results have been flattered to a degree, and that's going to fall away. So the true results will be coming through. If there was pressure on customer account whilst that happens, and I think the key bit here, and there was a loss of underwriting integrity, then you could see an impact on it. So I think the point is it comes back to maintaining that integrity through it, and then it shouldn't. But there is a risk there if that was to change.
Okay, that's a great answer actually, Joe. Just before Dan, before I move on, is any of you got any more sentiments? Because what we've done there in the last 25 minutes, which has been great in my view, in terms of where we are, the factors which are sort of impacting it, both in specialists in terms of sort of the more sort of generalised market, and certainly some of the sort of warning signs actually, which again I think has been very useful to hopefully sort of people on this call. So if you haven't got anything to sort of add further on that bit, what I'd like to move on to is actually looking at real solutions and overcoming those challenges. You've touched upon some of those in terms of your commentary. So actually, if I can come to sort of Joel and Dan, working with broker distribution, and MGAs in particular are extremely sort of, forensic in terms of how they operate with their broker distribution, as we know. What sort of levers and tools will you be sort of working with your brokers, to successfully deploy and therefore navigate sort of, the potential softening of the market? Do you want to pick up that one first?
Yeah, no, happy to pick up. I think it's a really interesting question. Actually, it comes back down to a little bit what Gary said a minute ago. If an MGA has sold its products on price into its brokers, then those brokers have one expectation of that MGA. And I think what we as capacity providers, and definitely at AXA, when we are picking the partners that we want to pick, it's critical for us to differentiate that, to make sure that we've got people who are focused on long-term profitability and can then manage that message into their brokers. And there's some, whether that be training, whether that be risk management, whether it be you only need to look on LinkedIn, right, to see the volume of training that is on offer through the MGAs to their broker bases, making sure that non-financial benefit that is offered is actually valued by the brokers, and making sure that the focus on price doesn't automatically return. I'm an ex-broker, right, 15 years ago, and it was easy. You could say, I'll beat your renewal by 10%. We've got to stop that happening by making sure that we are informing those conversations and bringing different client interactions together. And one of the things that you can see that we do in AXA, specifically on our MLP products, the DNO product, is that we've changed the way that the product works. Lee's the expert on this and can build on it, but our radar proposition is there to change the premise of an indemnity product to be one of risk advice and risk prevention, right? So that we can be there for our customers. That's good if you're a broker. That helps you make sure that your customer is getting the best advice from their insurance product. You would hope then they're not expecting it to be cheaper next year, because actually they can see the tangible benefits of what's being offered.
Dan?
Yeah, I agree with Joel on that. I think I'm glad we're all agreeing on the price point. That's a road to nowhere. So that shouldn't happen. I think, look, we all know you've got to be price proximate. Okay, that's not going to change. I think we accept that, but we have to have a differentiator. We need to have something for our distribution and our brokers that is a value add, and you'll know if it's a value add because it means it's something they're prepared to pay for or accept within the cost of their overall premium, because it gives them something, whether that's risk management, whether it's some clever tools around health and safety, for example, and many other things. And there's some quite innovative options that are coming into the market. And I think that's where the MGA market is really good, right? It's agile, it's pretty innovative, coming up with solutions for clients. And I would echo what Joel said around how AXA choose their partners. MGAs should be as picky as insurers about who they partner with for capacity. It's really important because it won't always be smooth, and the right partners will accept that. Delivery over the long term, I think, is what we're both looking for. So building that relationship and having a bit of goodwill in the bank means you can sort of smooth out the rough a little. And I think that's really key and something that MGAs in particular need to be conscious of, particularly maybe as the market does start to shift a little. Who you're partnering with, what does that look like, and what are their aims over the next few years?
Okay, Lee, it's an interesting question. This I'd be really interested to hear from all of you, actually. So, what tools do you feel, Lee, in terms of brokers, you need to be working with brokers with?
Yeah, Joel mentioned the MLP product, and we have hundreds of thousands of interactions with customers on that product at the front end in terms of helping them answer their questions and dealing with their issues. With their customers. And very, very few of those result in claims. So it's a very different relationship. And I think increasingly, the more that we can point at where we're able to do that as business partners, more than just insurers, then the more we can move to justifying the fact that we don't have to have the cheapest price all the time. So that is, a key point for brokers. There is a lot of choice for them to have, and the key point of a hard market is the lack of choice. Obviously, one thing starts softening, then they've got more choice to make. But weighing up those questions properly, weighing up the options, to Dan's point, truly deciding who it is you want to partner with long term, because that's what you're choosing to do as an MGA. Those are key questions to weigh up and not rush into, and not just chase the spiral, and think about who's going to be around, not just right now, but in 5 years' time, in 20 years' time, because a lot of these relationships need to stand the test of time. Not least if you're selling, financial lines products or long tail products that really do need to be available to the customer when they need them most.
Adrian?
Yeah, sorry, it broke up when you asked the question, Mike, earlier. So what was the exact question?
Well, just really the tools, really. Actually, the tools in terms of broker distribution. Brokers are at the coalface. They're dealing with the end customer, the person who pays the premium. What tools and how are MGAs, and say yourself, what are you doing to help and assist them to navigate what can be sort of quite choppy waters for brokers who are talking to end customers who've got economic headwinds, etc. So that's really what I was looking to try and tease out for the benefit of the panel.
Okay. So I mean, look, the key thing with an MGA, well, I think there's two key things, right? You've got two massive customer bases. One is the buyer and the other one's the supplier. So with the supplier side of it, that is a relationship that should be looked after very highly. It needs to be one that's based on openness, based on sharing, based on understanding. And then, as Dan said, the hard conversations can happen and you can normally get through it. From the broker side of it, I think it starts with, as an MGA, you just got to know your product. You've got to be able to talk about your product. You've got to know what it does. You've got to know why you're different, why you're competitive. You've also got to understand why you might be uncompetitive. And at that point, you start to take away some of the price pressure, I think, because you can demonstrate why you should be in the frame or chosen when there's all these choices. But on top of that, look, you've got to look at services that support the product. Insurance products are essentially not that complicated. And if you add something to it, someone will photocopy it the next day and they'll have it out in the market the day after. So adding new clauses and things like that, yes, that's interesting. But I think it's about now services need to be starting to add it to policies, and people, car insurers do that all the time, that support the policy and make the purchase, one, more preferable and two, more sticky.
Thank you. And Gary, interested in your sentiments, please?
Thanks, Mike. Yeah, and I was a broker prior to starting my underwriting career as well, so I get it, right? It's not easy, and often customers will say to you, how can you save me money, right? I get it. I think the answer to that always has to be one of, clear advice, understanding your product and your USP, your unique selling point, talking to the customers about, well, the likelihood is many of these claims that come through on these longer tail policies, they won't be settled for maybe 3, 5, 7, 10 years. So are we confident between us? Are we confident that the insurer and the MGA that we're dealing with are going to be there in that period of time? That's a really good conversation to have with a finance director. They understand it, they get it, and they understand the importance of that financial security because, they are trading that risk and that exposure away from their balance sheet. And at the end of the day, they want certainty. They don't want cheapness, right? So what we're selling as an industry, we're selling value. And if we can explain to the customers why we think the price being slightly higher is better value than the price being slightly lower, then we're exactly where we need to be, right? And unfortunately, in the past, it's been it's been irresistible for people just to sell on price. So again, if you win on price, you'll lose on price. And my plea would be, let's not go there as a DA community.
Okay, probably a question to Dan and Adrian, if I may. So in terms of sort of the broker community and real practical stuff, do you feel, as MGAs and with your broker distribution, do you feel there's bandwidth and opportunity to perhaps to look to advanced renewal negotiations, to perhaps take the sting out of, sort of that price point and very close to renewal? Do you have that bandwidth? Is that sort of a tool you try and work with some of your brokers in terms of, doing as much advanced renewal sort of negotiation on stuff? Dan?
It is, and I think that as much as possible we want to avoid surprises, don't we? Brokers and customers don't want surprises, so we need to be engaging early. And I think also it's not just about renewal, is it? I think it's that engagement piece throughout the year for us with brokers and then brokers with the customers. So what's happening, what's changed during that period, what might renewal look like, and what are we anticipating? So I think as much as possible, yes, we need to do that. And that's something that we do, and I think it's well received from brokers and customers. I think we can always do more on that, on engagement, and also, how can we help them more? I think that we live in an insurance bubble, and quite rightly, customers are focused on running their businesses, and really it's about how can we make that easier for them and help them do that. So I think if we can provide information throughout the sort of policy life cycle, information on what's happening with the market, and where that's going, I think that helps. So absolutely, that has to be an aim, to be having regular communication and early dialogue on renewals.
And Adrian, from your perspective, for your lens?
Yeah, look, I mean, same as Dan, really. It's earlier is better. Running things up to the wire is never going to be, a good time for anybody. So yeah, getting out early. Service is just so important. We hear this just all the time, that it's like, sort of picking up the phone. People, and I think I was asking about it yesterday. People don't pick up the phone at insurers. I'm sure this happens at MGAs too. I mean, it happens here.
Not for our members, Adrian. Not for our members.
All right. So yeah, but look, it's the simplest of things, right? It's getting back to people when you say you will, and picking up the phone, etc., etc. All these things, that will, that builds confidence, that builds trust, and ultimately you get a strong relationship with the brokers when they're making their choices.
I suppose, again, just staying on that theme, again, just a quick one-word answer from all of you, really. Do we as a community do enough of that with our broker community? Gary, do we promote that enough, or do we execute that well enough?
I mean, you can always do more, right? So we're always looking. I mean, one of the key mantras I've got with our team is more face time with brokers, right? So we can always do more, but yes, sitting in the ivory tower and planning and talking about it does not get us out in the market to see how we can work with our brokers and our DI partners better. So we can always do more, Mike, but rest assured we're putting huge efforts into making sure that, to Adrian's point, we answer that phone, we pick the phone up, we don't use email as much. It's very impersonal and it can be misconstrued very easily. So yeah, face to face is the way forward, definitely. Even in this new world we find ourselves in.
And Lee, do you think we do enough of it? Do we really all join hands and do enough of that? Because certainly brokers will.
Yeah, we can always do more, and people do try, I think, to varying degrees. But I do think that it's become less prevalent since lockdown. I think people have sat behind their firewalls, looking into their screens, not using the telephone so much, not actually knocking on doors and going to people on their own patch, not joining in with them and listening to other people's needs. At the end of the day, the best way to find out what a broker needs is to ask them what they want. And we just try to guess what they want a little bit, and try to impose solutions on them. So, yeah, there is good work that is done, but it's nowhere near as much as we could be doing. And I think, when you talk about this being an MGA community, the fact that MGAs exist kind of proves that insurers don't get out enough, because they are providing a service better than insurers, are getting building relationships better, are providing quicker turnaround on inquiries and providing better service. The proof's in the existence, really.
Joel, I know you look like you wanted to jump in there.
No, I do. I'm going to be boring and agree with everything that's been said. But actually, I think I was just reflecting when everyone was talking there about the face-to-face, and every time that I have a meeting face-to-face, or we've made the effort to go and sit in and sit with our MGAs or go and see our brokers, what always strikes me is, and we have this phrase in AXA, what we look for is the secret sauce. You can't find that if you're not sat talking to the people and seeing the whites of the eyes and actually understand how they are running their business. So for us, sitting down, understanding how an underwriter is using our capacities, there's nothing better than sitting next to them and seeing how it's going. And why did you do that? And why did you make that? Oh, we could help. That's the same, I think, for MGAs with their brokers. Is actually, it's the 80-20 principle, I guess, in a way. You're going to know who your key brokers are, actually spending that time to understand their customer journeys, how they acquire customers, how they interact. That's really important to embed the relationship that I think Adrian and Gary have mentioned.
And Adrian, from your own, that sort of face-to-face, what's your own experience?
I mean, it's the same as Joel. Look, it's really easy to send an email to someone. And look, some people prefer to communicate by email, some by phone, some face-to-face. I mean, you got to figure out how people want to relate. But there's no question, it's much harder to be angry at someone when you're sitting across the room from them than it is behind an email signature. And the degrees of and the warmth of the relationship comes down from there. So look, it's normally always better to be face to face, particularly if you're having a difficult conversation.
So picking up on Lee's point and thinking of our audience, then, and obviously Gary, you were quite clear that AXA are doing everything it can to sort of move the chains a bit more on face to face. Would you all sort of violently agree that is certainly a competitive advantage for MGAs who do that, because they have that agility, they're closer to their broker distribution, they've got the ability to go face to face, etc. Dan, is that in Brown and Brown? Is that something you feel is just one part of your USP as an MGA?
Yeah, I think it can be. I think it's there to be taken as a competitive advantage, because we can probably get out there and do that a little bit easier in a slightly more agile way. But let's be clear, you still got to go and take it. People get distracted by all sorts of things, and we forget about that sometimes. I guess the other point I'd add is you need to make it meaningful. Driving 2 hours to see someone have a coffee and say how your weekend is fine, but you need to do something else with it as well. What's going on in your business? What are we doing? Where does that cross over? How can we help? One of the things that we spent time on this year at Brown & Brown is how do we use our sales and distribution team, and what are they actually doing to add value? Because actually what you don't want is a load of people out on the road knocking on doors and having pleasant chats. I hope they're having pleasant chats, but I also hope that they're coming away with some actions and where we can help and actually add value to brokers, so they want to use us, because it's extremely competitive and there's plenty of options out there. So I think it's absolutely there, but we need to take it and do something with it.
Okay, thank you. So we've got about 15 minutes left. We have got one question which I will ask once I've just gone through my last sort of question to you all. Again, for those on the webinar, please feel free to sort of submit your questions, and I'm sure the panel will be more than willing to sort of answer them as best as they can. So look, really sort of, and I'll start with you if I may, Adrian, which you might think is unfair, but there we go. So could I ask you to highlight, having sort of, contributed extremely well for the last sort of 45 minutes, if you had to leave, the audience with 3 things in order to avoid, the slide into the soft market? What would be those three things you would like to leave, our audience today in terms of making sure that, they never ignore those three things as we navigate, these choppy waters? And I'll be asking the same for the rest of you. So you've got some time. Adrian, unfortunately, has been first up. There you go.
All right, three things, right. It is understand your product, really know the product that you have, its weaknesses and its strengths. That's so important, because once you get off the price discussion, that's the discussion. I would totally understand the data around the business, particularly the performance, so you can have informed discussions with capacity, and that way you will understand why things are happening, or you can relay why things are happening back to the capacity if things are soft in a certain area. And then service, it's in the end it's a service business, and it's about providing the best service you can. And that includes, and we haven't touched on it, but that includes claims, where I think one of the big differentiators, which always gets overlooked, is in the end, you buy an insurance policy for the check at the end of it, and the journey to get the check to be made whole. And sometimes that can be exceedingly painful. And with newer competitors or startups, etc., that claim service can be questioned.
Thank you. Gary, can I ask you?
So I think first and foremost, Mike, I think it's a reputational thing for the industry. That's why it's a good subject for today's talk, right? So it is important that us as a DA community are not seen to be driving the softening of the market. So, don't support those DAs that are out there with silly pricing. We all kind of know who they are. I think that's first and foremost for me. Number two is, so how do you retain clients? How do you win new clients? Educate the clients that cheap does not equal best. And that is the case in lots of walks of life. But insurance is probably magnified in that respect, because if you buy a cheap policy, the probability is there's something in there you didn't quite understand, and you'll not get what you expect at the end of it. So make sure you understand the longevity and the financial security of the carrier that ultimately sat behind that promise, right? So help your customers to understand and reduce their own risk. And I suppose to encapsulate that, win on price, you will lose on price. So you'll lose those customers the following year. And then finally, insurance is about providing a safety net. It's a safety blanket for businesses. And it's essential, again, as an industry, that we deliver on that promise at their time of need. And to do that, you've got to choose an insurer and a DA that are going to be there for the long term.
Thank you. I'll move to you now, Dan. So I've gone MGA, carrier, MGA. There we go.
Okay. So I think the first one for me is, from an MGA perspective here, own your underwriting performance. I think it's really key. You don't want to wait until someone comes and tells you to do it, or worse. So I think owning those performance and results is really important in doing that. I think the second one would be choose your insurer partners carefully. I mentioned this earlier. I think it can be a tricky business, and the long-term piece that everybody here just mentioned, Gary just mentioned it, is really important. We have a view at Brown & Brown that the insurer is the customer as much as the end customer, and we need to treat both in that way. And I think that's really important for those long-term sustainable relationships. And my last one would be something we touched on earlier, and that's around training. We're looking at trying to avoid those pitfalls of a soft market. A lot of that's going to come from the knowledge and actions of the people in your team, in your business. So I think putting a focus on that, and I think that's something actually that we can work on mutually. We've done a bit of that with AXA, and actually we should probably do a bit more of that.
Fantastic. Come to you, Joel, if I may.
Thanks, Mike. Lee's smiling, hoping I don't take his last three because we're running out. The ones that actually I I took some notes down while everyone's been talking. I think the thing that for me resonates a lot is customer choice remains, and actually the MGA market is quick and can be a bit more agile than insurers. So actually making sure that the MGA, you have confidence to sell your wares to your broker base and pick your brokers accordingly in terms of how they interact. I think they will then serve you in the conversation with the customer. But don't be shy. Have the confidence to really know what you stand for in the markets and the products that you're offering. Regular interactions. I like the way that Dan's words, and I'm going to plagiarise. It's not just about broker to customer, but it's also about MGA to brokers. How, and then MGAs to insurers. How do we actually all remember that we can provide advice, and that's where the partnership is. It's a full 360 partnership from insurer all the way down to the client. And we could definitely do more of that. The last one I had down is actually, especially for brokers and MGAs, is product per policyholder. I think is an underused metric. I really do. And actually, if you're thinking about the customer risks, whether that's a homogenized group of customers or you're more generalist, actually, how do you build more touch points with that customer? How do you broaden the conversation out into the other things that they need to understand for that business? Because to Dan's points earlier, they just want to run their business. That's what they're good at. What we need to do is provide them with the knowledge and experience that we have as an industry. Say, have you thought about that? We have a solution for it, but have you thought about this, and give them better choice.
Okay, thank you. And last one, at least, Lee. And we've got a couple of questions to answer before we close.
Yeah, thank you. Thanks, Mike. I mean, a lot has been said already, and I'm at the risk of repeating what other people have said. Communication is plainly key. Managing expectations of all the people involved, the customer's expectations as to what can be achieved, but also the expectations of the carrier in terms of what the MGA needs to do to retain the customer. Keeping that communication channels open and honest and fair is very important. I'd ask that people try to make decisions for the long term, thinking about, how do I retain this customer not just today, but in 5-10 years' time. And equally, you can do that by having a long-term relationship with a stable capacity provider. And then finally, to the point that Joel just stole from me, which is terrible, that kind of cross-sell, because he knows this is my kind of big thing. I'm always talking about cross-selling products. Having that breadth of relationship with and not being on monoline fixated on one product can really insulate the business away from suffering from losing business in a soft market. It is much more difficult for customers to shift or be stolen from you if you have a wider breadth and more tentacles into them. So it's something we at AXA are working at very hard to try and do, and to help our MGAs provide to customers by adding simple solutions to broaden out that offering away from just one product.
Thank you. It's absolutely some fantastic advice and putting pointers there. Thank you very much. So I'm just going to look at the two. Oh, right. I don't think. Oh, here we go. Okay, so the first question I can pick up here is to the panel. What is the panel's view on how the current economic environment will affect customer demand? Regardless of the improvement in communication between the insurer and the customer, can we guarantee that the customer demand will remain stable as inflation lowers towards the 2% goal in 2024 and the economy shrinks? So I think we're looking at the good question around the economic headwinds and what do the panel think about how the customer is going to navigate that. Who would like to pick that one up?
I can take that, Mike, if you want.
Okay.
Yeah, I think, the UK economy historically has always proved itself to be extremely robust. So I think it's a really good question, that one. But I do think, I've got confidence that the UK will find a way and that small businesses will continue to prosper. as will larger businesses, as we face into some of the challenges that we face both in the country and around the globe. I think the other point for me, right, is selling new products. We just touched on it a little bit, but also selling to new customers. So if you take some of the specialty lines we talked about, there's many hundreds of thousands of customers in technology, media, consultancy who don't buy products at the moment because nobody's got to them and described why they need them. Cyber is a good example of that, and a huge opportunity for all of us to really get out there and engage with customers and let them know the exposures they're running and hopefully transfer them from their balance sheet onto ours.
Okay, thank you. And the final question, I'll probably come to you for this, Lee, because this sounds like it's in your sweet spot, and you probably have answered some of it. But a question from Connie: what do the panel think about making insurance policies more sticky, perhaps by cross-selling, in order to avoid just selling on price and thus to avoid moving from hard market conditions to softer market conditions? So I know you sort of covered it. I just wanted to give you the opportunity to reinforce what you said a little bit earlier.
Yeah, thank you, and thank you to Carney, who is plainly my plant in the audience. So that's excellent, thank you. But yeah, absolutely. I think it's not just about making business sticky, is it? It's about providing better service to the end client at the end of the day. If they have a one-stop shop where they can get the right products for their business, then that's good for them. Equally, we mentioned earlier about different insurers providing different products and potentially those products not dovetailing. Well, if there's a single provider, then that really helps them as well. So yeah, it is about that wider relationship and that deeper understanding of the customer's needs. It benefits all, and it enables us as insurers to provide a more stable safety net for that business in case it runs into trouble in whatever arena. So yes, thanks for that one, Kylie. That just really runs home the point me and Joel were making.
Okay, well look, there is no more questions. So first and foremost, I'd like to thank Joel, Dan, Lee, Adrian, and Gary for your expert insight, your transparency and honesty in terms of your view where we are in current market conditions, and critically in terms of the toolkit, which we all need to be looking to deploy to ensure we don't sort of suffer the sins from the past and go the slippery slope into a soft market. So again, on behalf of the MGAA and all the audience of today, thank you very much for your time and that input. And I will bring this webinar to a close. Have a good afternoon, everyone.
Thanks
very
everyone.
much.
Thanks all. Thank you very much indeed for your time. Thank you.